Welcome back to The Real News in part two of our conversation with Bill Black. I'm Kim Brown. We've been discussing the expected confirmation of Steve Mnuchin as Treasury Secretary. And Bill, I wanted to ask, because the LA Times is reporting that there are some major decisions awaiting Mnuchin should he be confirmed on Monday night, including the need to increase the debt limit next month and also to decide by April 15th whether to label China a currency manipulator. What are your thoughts about these things that could be awaiting him once he becomes Treasury Secretary?
Yes. So the first one is almost meaningless. It was simply used by Republicans as a device to extort President Obama to make concessions on domestic programs. And so the Republican legislatures can't do that against Trump. So that one isn't going to be of any particular importance. By the way, in the last thing we have numbers for, there's actually a small budget surplus in the last period. That's a bad thing. We've gone increasingly towards austerity, and that has slowed the recovery, but it's taken political pressure off of them. Now, on manipulators of currency and China, that actually is interesting. So as everyone has seen, Trump started out very aggressive against the People's Republic of China, the big one, and unusually friendly towards Taiwan, the tiny one. But he backtracked a couple days ago and said, no, I believe in one China, which is to say the only real China is the big one. That he has in the past lambasted as a currency manipulator. And the argument is that China deliberately keeps its currency undervalued because that makes it easier to export. Now, that fits into a story of about 4 days ago that Trump at 2 or 3 a.m. called Flynn, his incredibly ethically challenged national security advisor, and asked him whether a strong dollar or a weak dollar was good for U.S. exports.
Now, I'm not sure if that's within Michael Flynn's purview as a former general and head of the Department of, Intelligence Agency and now Trump's NSA advisor. So why in the hell would Trump ask him?
Well, that's sort of the idea, right? This is, again, the gang that can't shoot straight. And how could Trump have raged for a year and a half about currency manipulation and how China was, weakening its currency to be able to export without understanding how that works, right? You would think that was impossible. And why in God's name would he not, if he really felt the need to learn this at 3 a.m., and there's no reason he would need to know it at 3 a.m. It's not like a crisis at 3 a.m. Why would he not call his economists? Well, in part, it actually comes back to the Mnuchin question, and that is, Trump really doesn't have economists. He has business people filling the slots of economists, and indeed he's just downgraded the President's Council of Economic Advisors, because that's where the people go who are actually economists. And again, this is just making something that a Democrat did worse. So that Democrat is Bill Clinton, and it was with connection to Bob Rubin, right? So Bob Rubin is not someone who has expertise in economics. But Bill Clinton wanted Rubin as his chief economic advisor. And he obviously couldn't appoint him to the chair of the Council of Economic Advisors because everyone would laugh. So he created a whole new position, right? And a whole new staff, and put Rubin in. And that's sort of parallel to the Council of Economic Advisors, but run not by economists, but by business types. And lo and behold, Trump's doing the same thing with Cohn. who, according to news stories, is emerging as his principal economic advisor, even though Cohn also, like Mnuchin, is not an economist or someone who knows a whole lot about economics.
So, Bill, I mean, as you mentioned, that the Treasury Department is overseen usually by Wall Street types, and with going back two presidents to W. Bush with Henry Paulson as Treasury Secretary, and then moving on to the Obama administration when he appointed Tim Geithner, and now it's looking like Steve Mnuchin. So, I mean, how can the Treasury Secretary, regardless of the administration that they're working under, what can they do to influence the economy, and what should we expect from Steve Mnuchin in this role?
What you should expect is what he has threatened, which is to lead a wave of financial deregulation and to, again, do what his predecessors have done, which is just be a dream ticket for Wall Street's greatest wishes.
But Bill, won't the same thing presumably happen that happened in 2007, 2008? We saw a tremendous amount of financial deregulation on that industry under George W. Bush, and as a result, the economy crapped out in a very big way. So if we employ the same policies, shouldn't we expect the same results?
But the bank CEOs made out like bandits, and that's what they are. And so they loved that whole period. And they are very eager to have the regulatory cops on the beat completely off the case. Now, again, President Obama refused to prosecute even the worst criminals from that period that you've talked about. So, and he was in his whole economic team after the first year was composed of Bob Rubin proteges. Indeed, starting with the first year, much of the team was. Larry Summers, after all, was the protege in many ways of Bob Rubin. But after that, it got even worse. Everybody in the senior ranks giving him advice was a Rubinite. So, yes, the New Democrats have opened this up by denouncing government for their entire existence and praising Wall Street in specific and billionaires in particular, and saying, we need to listen to these people, we need to take their guidance, they know how to run things. They're actually, as you saw with Hank Paulson and Bob Rubin, they're actually terrible. they're terrible at finance and economics if you think economics and finance is supposed to be good for the people. But if you think economics and finance is supposed to be good for Wall Street elites, well, then they're great for Wall Street elites.
So, Bill, one of the proposals that Donald Trump has called for is to get rid of Dodd-Frank, the regulations that were put into place after the economy collapsed in 2007, 2008. So what would that do to the U.S. economy if Dodd-Frank is repealed?
Well, first, it probably won't be repealed. It is too many things, and a number of the things the industry is actually not terribly upset about. But what they have already emphasized is they want to weaken capital requirements. That is unquestionably stupid. That will encourage growth. And that will encourage folks to renew the fraud schemes and such. And it will lead probably first to a number of very large bubbles. It will lead to greatly reported profits and bonuses to Wall Street elites. and it will produce the next financial crisis and Great Recession or worse.
Indeed. Well, Bill, we're going to keep an eye on how this goes with Steve Mnuchin, as expected to be confirmed tonight by the Senate, Monday night, as Treasury Secretary. But we will be watching very closely what his moves are. And as soon as April, we could be seeing some interesting revelations coming out of the Treasury Department. So we really appreciate your time and your expertise today. Thank you.
Thank you.
We've been speaking with Bill Black. He's been speaking to us from Kansas City, Missouri. He's an associate professor of economics. Oh, sorry. Well, okay, hold on. We've been speaking with Bill Black. Bill is an associate professor of economics and law at the University of Missouri at Kansas City. He's been joining us today from Minnesota. So, Bill, we appreciate you as always. Thank you.
Take care.
And thanks for watching the Real News Network.